First up, just take us through your latest results.
Yeah, for sure. So I think the key headline here is we've increased our annual recurring revenue by 34% to 42.2 million. We had record customer growth up to 630 customers, and we reduced customer churn substantially to just 2.4%. A key thing about the quality of our customers, we have this blue chip roster of customers, is the quality of our revenue retention. So we retained 124.1% of customer revenue year to year. That's a best-in-class result. It's really a reflection of the profile of engagement that we have with our customers, generally people start small to solve communication challenges, but incrementally build out use cases over time. We become embedded in their communications infrastructure as their sort of communications backbone in many respects.
So we've talked a lot about how the reason we've seen this jump, and a lot of people would say this bubble in the tech sector, is because the pandemic has really just accelerated some existing structural changes and trends that were already in place before the coronavirus hit. Is that the same case for your business? And do you expect these trends, and also I should say the jump in the share price, to be sustainable?
Totally. So the digital transformation has gone from being a tick box on an executive's balanced scorecard to a top business priority for obvious reasons. I mean, digitisation of manual processes reduces dependence on humans. It increases efficiencies. If it's done in the right way, it helps organisations to become more resilient, more nimble. But importantly, it gives them new tools to engage with customers and staff and to be more effective. And these things are challenging. Businesses are all quite different. They've got different stakeholders, and they have quite a complex tapestry of technologies that they have to engage with. Is it Facebook Messenger? Is it WhatsApp? Is it voice? Is it personalised video? Or is it, rich dynamic mobile experiences? And it's those organisations that are now leaning into that leveraging that capability are going to be super well placed at the end of this COVID calamity. We see, though, what we anticipate is a sort of a post-COVID bump in activity, because there are many industries where operations are constrained and there's just less activity. As people find new ways of dealing and living with COVID, we anticipate organisations will really double down in terms of how they get back on that business highway and get their businesses and organisations moving again. And communications is one of those things which is highly visible, highly impactful. It's low cost to implement strategies that position a business well in front of customers and employees. So it becomes one of the early movers in terms of strategies that businesses can deploy post-COVID.
So, Jeromy, you have clients both in the private and public sectors. What are some of the needs that you're seeing from your clients, and do they differ?
Oh, for sure. So we have more than 11,000 different use cases where customers have taken templates and off-the-shelf workflow and they've made modifications so that they can start solving communication problems quickly. About 35% of our customers are in the government sector, and for a broad range of departments. But we really specialise in quite a large number of verticals. So critical infrastructure providers, utilities, banks, telcos, insurance companies, transport and logistics, retail, FMCG, emergency services, education, healthcare. Those are our key verticals, and the benefit of that is we have very limited exposure to any one market. And there's a lot of opportunity where we can, as a trusted advisor, assist our clients by sharing insights from what other industries are doing and where the innovation's happening and what's transferable.
Before we let you go, explain to us a little bit about your business model, because you do have a subscription model and it has a component of user pays charges, and you have different levels as well.
Yeah, for sure. So at its core, we're an enterprise SaaS business, so people pay a monthly software licensing charge that scales with the size of an organisation. But what we seek to do is to align charging with business value. So when people use the technology and there's transactions, then there's a small transactional charge. That way, people are not apprehensive about costs and charging, and there's a binary relationship between the value that we're delivering and the way that we're charging. And what we see is organisations start relatively modestly because you want to keep the risk low and you want to deliver a return on investment in the first 5 days. Often these days our customers are getting up and running in a couple of hours.
Right.
But what we see is customers' processes aren't necessarily mature where they can exploit the capabilities straight away. And so it takes time as people think about the technology and evolve their thinking and develop processes to then incrementally add new use cases on. What we find, though, is once an organisation generally has 3 use cases, then they become sticky long-term customers.